Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for August the 31st, 2010. Now our first position with a very volatile week ahead, we're going to start with the softs here. We're going to stay away from some of the equities and some of the currencies because again with the non-farm payrolls coming out on Friday, we're going to see a very volatile week with a considerable amount of indecision. So with that, we're going to try and stay away from some of those markets and look for areas to make money where the correlation is very low to the currency and equity markets. So our first position for tonight, excuse me, is going to be in coffee contracts. We can see that we've had a nice move up here. Now we've also got a fresh crossover on this triple EMA cross. Now very important to point this out. Our key levels 173.36, 174.74 and 175.99. Now when the crossover is fresh on the triple EMA like this, our focus is on the 3-day predicted moving average at the 175.99 area. Now what we want to do from there is go in, have a look at our predicted highs and predicted lows and make sure that everything still matches up. We can see that we have 176.78 and 181.21 as the high for tomorrow. So 176.78, that's our low, our 3-day predicted moving average, again coming in at that 175.99 area. So anywhere in between that area of 176 and basically 176.80 and 175.99, we want to look at this to get into our buy positions. Now there's a number of other things we want to look at in this trade to make sure that this trend is forming and everything looks good. I have the predicted medium and long-term difference here. They're both coming just above the zero line, which is again a very good sign because it points to a trending move. We've got our predicted MACD, our crossover is taking place just above the zero line. Our predicted stochastic has already made the cross. Our predicted true strength indicator not exactly cooperating here, but it's still, you know, we have to take majority rules here, and the majority of the indicators are definitely pointing higher on the coffee contract. So our entry point, again, between the 175.99 and 176 area, all stops are going to be below this 173 area just to make sure we don't get caught up in this intraday stuff because, again, high volatility this week, and we're looking again for something that's going to have a very low correlation. Now, our second trade is going to also be in the softs. Now, the lumber contracts, we are in a buy. We can see that it's basically running flat for a considerable period of time, but the triple EMA cross did go off again last week around August 20th, August 18th. Now our key levels here are 209, 211.10 and 212.50 with a close of 213.90. So for tomorrow, again, with this close of 213.90, all our stops are going to be below the 209 level. Now let's go into that into the daily report to get the predicted high and the predicted low and see if we can again narrow this entry point down. So we have 210.70 and 214. However, the neural index is down. So with the neural index is down, the initial move is likely going to be to the downside, but we can use this to our advantage. Now that we know this, and we know that the market's going to move lower, we want to use that to set our buy position. So obviously this 211, anywhere between 211.10 and 209 is where we want to get in. But I actually like the 211.10 area. I think that area is going to hold, and we're going to get that extension higher, and it does, you know, it does represent a pretty decent move. Our predicted stochastics here is crossed over, however, close to overbought territory. Our predicted MACD, we have a fresh crossover here to the upside just above that zero line, and our predicted medium and long-term differences are not overbought, but our medium term, we can see that this light colored purple is running essentially flat, and our predicted long-term difference, however, is clearly in the positive. So again, the lumber contract, longs on the lumber contracts still look quite good, and we could be getting into again a fresh move here. So I like the coffee contracts, definitely like the lumber contracts, and we're going to, even though with this volatility, we are going to enter into one more position here for tonight or tomorrow, depending on when you're looking at this. And our last position is going to be in the currency markets. Now, looking at our third position, we're going to be again looking at the US Canadian dollar. You remember we were shorting this one last week in that 106.70 area. Very nice trade, pulled all the way back to the 18-day predicted moving average from vantage point. Today we can see that it went down to 104.74. So anybody holding that position for a few days from last week definitely paid quite well, actually a couple hundred pips, so that's good. Now you can see that I have this line drawn right across here. On this position we have a significant amount of resistance between essentially 106.80 and 108.50. Now we can only see this one line that I have drawn here at this 106.70 area. Now if I back this out for 6 months, or well, let's even go to 9 months, we can see that we have a considerable amount of resistance also in this 108.50 area. So it's essentially we're range trading, and as long as this stays in place, we're going to continue to do what we've been doing for the last several months. Now as it approaches this area towards, we can see that our 104.58, 105.22 and 105.63 are our key levels of support. It essentially has held, and now it's moved higher. Now equities played a huge part in this. The equities sold off at the end of the day and the US Canada moved higher. Crude oil softened. We have a nice size hurricane developing in the in the Atlantic and in the Gulf, and if that's going to definitely cause oil prices to rise. Now as those crude oil prices move higher, that should push the US Canadian pair lower. So we're taking here, what we're doing with this particular trade is we're taking a little bit of fundamentals and a little bit of technicals to combine this for a decent contrarian position. So again, for tomorrow, we're going to go in here, have a look at the daily report. We're going to be using the predicted high for tomorrow to set our short positions. Now, looking at our high tomorrow, we have neural index is turned up. We've had 2 down days. We have 106.45 and 105 as the low. So on a move towards the 106.45 area, we want to use that to set our short positions, and then we would expect to move back down towards the 105 area probably by late day. Potentially we might have to hold this one till Wednesday or Thursday. We've got some Canadian economic data coming out tomorrow, the GDP I believe. Not likely to favor the Canadian dollar initially, but again, that kind of economic noise we're not looking at. We're looking at the correlations, the intermarket correlations, equities, crude oil, and if we're correct and the crude oil moves higher, again, the US CAD will move lower. So those are the positions for August the 31st, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.